Ladies and gentlemen, welcome back to Boss Economics World, where we cut through the jargon, expose the madness, and hold the powers that be accountable for the economic dumpster fire they've been stoking. I'm your host, the no-nonsense voice of reason in a world of central bank spin and government gaslighting. Buckle up, because today we're diving headfirst into the latest economic mess, brought to you courtesy of Jerome Powell, Donald Trump, and a Federal Reserve that's about as decisive as a squirrel crossing a highway. Let's talk about how this circus of mismanagement is sending us barreling toward Recessionville, and why you, yes, you, the hard-working taxpayer, are the one left holding the bag. Folks, let's start with the star of the show, Jerome Powell, the man tasked with steering the U.S. economy through a storm of trade wars, market meltdowns, and inflationary chaos. This week, Powell's got a tricky task: reassure investors that everything's hunky-dory while simultaneously signaling that the Fed might, just might, step in if the economic wheels fall off. Sounds like a classic case of talking out of both sides of your mouth, doesn't it? And let me tell you, Powell's been tap dancing on this tightrope for months, trying to convince us the economy is resilient while markets scream otherwise. But here's the kicker: stocks have been tanking, down 10% from their peak, with Wall Street's fear gauge, the VIX, spiking to levels not seen since August. Bond yields plummeting. The 2-year Treasury yield, the one most sensitive to Fed policy, has crashed nearly 60 basis points from its mid-January peak to a measly 3.83%. And consumer sentiment? Sinking faster than a lead balloon, thanks to Trump's trade war tantrums. Yet Powell's out here telling us the economy is in a good place. Jerome, my man, who are you trying to fool? The data's screaming recession, and you're whistling past the graveyard. Now, let's zoom out and talk about the elephant in the room, or should I say, the bull in the china shop. President Donald Trump's escalating trade war is the gift that keeps on giving, economic chaos, that is. Tariffs, threats, and tweet storms. Trump's turned global trade into a reality TV show, and the U.S. economy is the unlucky contestant getting voted off the island. Just last month, Trump slapped new tariff threats on America's largest trading partners, sending shockwaves through markets and supply chains. And what does the White House have to say about it? Oh, just that we're in a period of transition, and the economy needs a detox. A detox? Are you kidding me? This isn't a juice cleanse, folks, this is a full-blown economic hangover, and Trump's the bartender pouring the shots. Let's break this down with some hard data. According to the U.S. Census Bureau, the U.S. trade deficit with China ballooned to $419 billion in 2023, up from $375 billion the year before. Trump's tariffs were supposed to fix that, right? Wrong. Instead, they've raised costs for American businesses, disrupted supply chains, and fueled inflation. The National Retail Federation estimates that Trump's latest tariff threats could cost U.S. consumers an additional $78 billion annually, money that's coming straight out of your pocket, folks. And don't even get me started on the impact on manufacturing. The Institute for Supply Management's PMI, a key indicator of manufacturing health, has been flirting with contraction territory, dipping to 47.8 in November 2024, anything below 50 signals decline. But sure, let's call it a transition. I guess that's White House speak for, we broke it, and we don't know how to fix it. Now, let's pivot to the Fed's other headache, inflation. For months, Powell and company have been patting themselves on the back, claiming they've got inflation under control. But the data tells a different story. Sure, consumer prices rose at a slower pace in February, and the producer price index was flat month over month. But dig into the details, and you'll see the Fed's preferred inflation gauge, the Personal Consumption Expenditures, PCE, price index, is still stubbornly above their 2% target. Core PCE, which strips out volatile food and energy prices, clocked in at 2.8% year-over-year in October 2024, according to the latest Bureau of Economic Analysis data. And here's the real kicker: long-term inflation expectations, as measured by the University of Michigan survey, just hit a 3-decade high. 3 decades, folks. That means businesses and consumers are betting inflation's here to stay, which only makes it harder for the Fed to tame. So what's the Fed's plan? Well, if you listen to Powell, it's a whole lot of nothing. He's out here saying the Fed's well positioned to wait for greater clarity. Clarity? Jerome, the economy's flashing red lights, and you're waiting for a neon sign that says, recession ahead? This isn't leadership, this is paralysis. And let's not forget, the Fed's hands are tied because they botched the inflation fight in the first place. Remember 2021, when Powell called inflation transitory? Yeah, that aged like milk. The Fed kept interest rates at rock-bottom levels for too long, pumped trillions into the economy through quantitative easing, and now we're paying the price. According to the St. Louis Fed, the M2 money supply, the broadest measure of money in circulation, ballooned by 26% from February 2020 to February 2022. That's the kind of money printing spree that fuels inflation, folks, and now the Fed's stuck playing catch-up. Here's where things get really spicy. Wall Street's betting on 3 rate cuts in 2025, with the first one likely in June. Economists, on the other hand, are more conservative, expecting just 2. But here's the problem. If Powell keeps signaling only 2 cuts, he's gonna have to do some serious sweet-talking to convince markets the Fed's ready to act if the economy tanks. And let's be real, markets aren't buying what Powell's selling. The CME FedWatch tool, which tracks market expectations for Fed policy, shows a 75% probability of a rate cut by June 2025, up from just 50% a month ago. Investors are spooked, and they're begging the Fed to ride to the rescue. But here's the harsh truth, rate cuts aren't a magic bullet. Even if the Fed slashes rates, it won't undo the damage from Trump's trade war or fix the structural problems in the economy. Just look at the labor market, which is starting to crack under the pressure. The latest jobs report from the Bureau of Labor Statistics showed payroll gains slowing to just 150,000 in November 2024, well below the 12-month average of 194,000. And the unemployment rate? Ticking up to 4.2%, the highest since late 2021. If layoffs spike or wage growth stalls, the Fed might be forced to act, but by then, it'll be too late. As Matthew Lazzetti, chief U.S. economist at Deutsche Bank, put it, the Fed's in wait-and-see mode. Translation, they're crossing their fingers and hoping the economy doesn't implode on their watch. Now, let's talk about the real culprits here, the government. Trump's trade war is just the tip of the iceberg. The administration's been playing fast and loose with economic policy, floating ideas like tax cuts and deregulation to boost the economy. Sounds great, right? Wrong. Tax cuts might juice growth in the short term, but they'll also widen the budget deficit, which is already ballooning. According to the Congressional Budget Office, the U.S. federal deficit hit $1.8 trillion in fiscal year 2024, the highest since the pandemic. And deregulation? Sure, it might help big corporations, but it does squat for the average worker struggling to pay rent in an economy where housing costs have soared 20% since 2021, per the Case-Shiller Home Price Index. Meanwhile, the government's done nothing to address the real risks of recession. Instead of calming markets, Trump's team is out here talking about detox and transition. Folks, this isn't leadership, this is a masterclass in denial. And let's not forget the looming debt ceiling fight. The Treasury Department estimates we'll hit the debt limit in mid-2025, and if lawmakers can't strike a deal, we're looking at a potential default. Remember 2011, when the debt ceiling standoff tanked markets and led to a U.S. credit rating downgrade? Yeah, we could be in for a repeat performance, all because our leaders would rather play political chicken than govern responsibly. Oh, and speaking of disasters, let's not forget the Fed's balance sheet mess. For years, the Fed's been running quantitative tightening, QT, shrinking its balance sheet by letting bonds roll off without reinvesting the proceeds. The idea was to normalize monetary policy after years of QE bloat. But guess what? Markets are hooked on cheap money, and QT's causing withdrawals. Wall Street's begging the Fed to slow or pause QT, and minutes from the Fed's January meeting show policymakers are at least talking about it. But here's the problem, if the Fed pauses QT, it's admitting the economy's too weak to handle tighter policy. And if they don't, they risk sucking too much liquidity out of the system, which could trigger a market meltdown. Damned if they do, damned if they don't, classic Fed mismanagement. Folks, let's connect the dots. Trump's trade war is killing growth. Inflation's sticky, and the Fed's out of moves. The labor market's cooling, consumer sentiment's tanking, and markets are on edge. All the signs of a recession are here, and what are our leaders doing? Squabbling over tariffs, tweeting about detox, and waiting for clarity. This isn't leadership, it's negligence. The government and the Fed had years to prepare for this, but instead, they've been kicking the can down the road, hoping the economy would magically fix itself. Well, newsflash, it didn't, and now we're all paying the price. So what's the takeaway for you, the hardworking taxpayer, the savvy investor, the concerned citizen? Brace yourself, because the ride's about to get bumpy. Protect your savings, diversify your investments, and don't trust the government to save you, because if history's any guide, they'll be too busy saving themselves. And hey, if you're as fed up as I am, smash that like button, subscribe, and share this video with everyone you know. Because here at Boss Economics World, we're not just exposing the madness, we're fighting for the truth. Until next time, stay sharp, stay skeptical, and remember, the only thing more inflated than the economy is the ego of the people running it.